Yeah, good morning, Daniel-san. Welcome, my people. Estonia, Sweden. Welcome to the stream. Who was watching the FOMC press conference yesterday? Who was watching it live? And who was watching the markets live during that time? Are you watching the market? Yeah. So what do you think about how it moved then? I'm asking some tricky questions. So what do you think about how it moved? I only watched the market, yeah. I can tell you this. Market moved. Exactly. Roller coaster trading. I can tell you this, trading yesterday was a gamble. I tried to scalp a little bit, and I went first. I think I went like $250 in minus. Was scalping gold, and then I took it back, and I went like $80 plus, and I was like, okay, I'm done. I'm not touching this anymore, because it could go any direction. The thing is like this. What happened yesterday was. Right, let's recap that. So Jerome Powell comes out, has a speech, and remember what I said, we expect 25 basis points increase of the interest rates, and that is exactly what happened. But so that was no issues. That is as expected, and the market we had gold and a couple of commodities pairs started to pump because US dollar started to drop, but it was expected, so it was no big moves like that. Yeah, nice Rio. And then he had a press conference, and he started to talk about, he got the questions in the during the Q&A session, how he was going to handle the bank crisis, how they were handling it, and stuff like that. And of course, that was the most interesting thing on everybody's lips and on everybody's mind. And the answers he gave was like typical political answers, very tricky, like you had to basically decode it. But he gave some very hawkish news. So basically, he's saying that, yeah, we won't increase interest rates, but bank will proceed with actions that is very similar to basically increasing interest rates. So it will be very hard to loan money from now on, and things like that. They will preserve their liquidity. Sorry, they will preserve their liquidity, and that is the same thing as interest rates. That is less liquidity out in the market. That is less. It'd be more difficult to get loans out, and that means that less money is coming into the financial markets, to the stock markets, to the forex market, to the crypto markets. So people or the world started very hawkish, and therefore things started to drop. So we saw Nasdaq and Bitcoin and a lot of things drop. After that, gold made a move. Gold started to pump actually. So gold made a drop and then it started to pump. And that is the pump is what I caught a little bit because I was waiting for that pump. And that's the thing we see here. So we got this, and then we got this. No, sorry, I'm a little bit too zoomed out. We got this here yesterday, this dip, and then we got this pump. All right. So no major moves, but we got it. We had a nice pump yesterday, actually, very nice pump. So, and with that said, nothing more to decipher there. We proceed with the markets and we see technically where we're at. Fundamentally, we should be done now for for a while with this fundamental turmoils, and hopefully we can just focus on the TA now, on the technical analysis, and see what the market is doing. Lately, the fundamental factor has been playing a big part of analyzing the market. So the TA has been, of course, good as always, but a little bit off due to the fundamentals. I want to show you guys something. I want to show you guys Euro USD. Look at this. Euro USD is flying. Sorry guys, I don't know what's up with my throat today. Euro USD is flying. So what we're gonna do now is we're gonna see where it's going. We're gonna clean this chart up a little bit. Start looking at where this might be going. So same like gold. You recognize this move? This V shape or U shape? Same like gold because it's basically in reverse to the US dollar. You see how the US dollar has moved? It's completely in reverse. So we do the same thing. We want to see this big swing that we got here. We want to see where we're at on that big swing. And that big swing ends here. We'll make this line nice and thick so that we can distinguish them like that. All right. Let's remove this. All right, so the last big swing, the last big bullish swing we had was this one, this bottom, this top, and the last bearish swing was this major drop that we had here. So we're going to measure both of them to see if we can find some correlation and see where we're at. Like that first. And all right, so looking at this swing here, this last bullish swing that we had, if we're pulling Fibonacci and watching the extensions, the green lines are the extensions. You see that Euro USD has found resistance perfectly against the 61.8 extension. And yeah, it's basically, it's not even resistance anymore. It has broken through. It's broken through, came to the supply zone here. This is a very strong supply zone. Dipped his finger, picked up some supply. It's coming back down and testing the 61.8 Fibonacci extension as support now. So it come up, it's broken through, and retesting it as support now. Man, good we have coffee. That's why I'm always saying coffee is a lifesaver. Coffee is the best. I don't smoke, I don't drink. but I do coffee. So that's it. So what does this tell us? We have support and we have resistance. So we kind of locked in a box here in between the supply zone and the 61.8 Fibonacci extension. So basically what we need now is we need some bullish confirmations to see that this will continue, or we want a bearish confirmation to see that we're having a sell here. Either way, we had a breaking point where it's going to be either a sell or a buy. So we have either a sell or a buy going on here, all right? How big they are, we will have to determine. But if it's a buy, I don't see it being as big as if it's a sell. If it's a sell, we have a long way to go. We have a lot of liquidity to fill. So let's do like this. And let's look at this a little bit closer to see if we can find some more confirmations in this. Opa. Where the heck is my... Okay, I have to remove these. Shit, man, I have to renew my subscription. That wasn't bad. That wasn't good. Yeah, well, next stream. It is what it is. Okay, so cool. We have this small move here. We're on a 50-minute time frame right now. And now we want to look for what type of correlations we have here. I'm gonna zoom out a little bit again. I want to see this last push that we had, this absolute last push that we had yesterday. Analyze it, see, because the thing is like this. What you gotta understand from this push is this. Look, we have liquidity trapped here. Let's make this one green as money, the color of money, because we're talking about liquidity now. Something like that. All right, we got liquidity trapped here, and we got liquidity trapped here. Like that. So market kind of needs to come back down and clear some of this liquidity, fill some of these orders. There's a lot of unfilled orders here. There's a lot of sell orders, also probably also buy orders that are unfilled here, that market has just pushed right through and they have never triggered. So market wants to come back and come back to at least 50% of the zone and fill some of this liquidity. Now 50% is very correlate. Yeah, it correlates perfectly with the 27.2 Fibonacci extension right here. So I can definitely see this market retrace down here, chop around a little bit, and maybe from there continue with a push. Now, when we see that, that's a narrative. And we make a drop before we make another push. Now let's see if that is something that the market is showing tendencies of to do. Yeah, so we get more correlation. All right, so let's do like this. Let's take this, we make it striped, a little bit thicker. All right, cool. So look, now we have the liquidity zone here. It's the green area. In the same time, what do we have? In that area, we have this big sweet spot zone. It's this thick yellow lines that you see, which is also a lot of liquidity. In the same time, we have the smaller sweet spot zone from this swing here, from this last swing. This bottom, this top. We have another even more sweet spot here. So Like Daniel once said, so nice, Katze, super sweet. It's a super sweet spot. So what I believe is this. I believe that this market is coming down a little bit, and I think this is the target we're coming down to. At least the first target. This is the first target actually, and this is the second target. But I believe the market is coming down here, but it will chop a little bit here because here's a lot of resistance. So with that said, we have a nice sell going on, Brune. But the problem is, not the problem, but the question is, when do we enter? We should enter basically now. We just want to get some more confirmations on that. And let's look for those confirmations. And where do we put our stop loss? This is a sell that is about, yeah, it's almost 80 pips. So it's a nice sell. The market is already dropping. Don't rush into it just because you see it dropping. This is just a couple of pips. You rather sacrifice those pips than make a bad move. See, pumping up again. Damn, the correlation is crazy perfect. It's a lot of lines here. I don't know if you see what I see, but supply zone, market is in it right now. It rejected the 127.2 Fibonacci extension right here. Correlate perfectly with the 78.6 Fibonacci retracement of the big swing that we looked at from beginning. So the rejection is very strong here, and this zone is very strong. So what I see here is this. Look, this is the entry. This is where I'm going to enter the market, right underneath where we are right now. So we want to see actually the market move down a little bit in our direction before we enter the market. We want that is a confirmation of that the market is doing what we want it to do. So we want to see it break through this these two red striped lines. This is the no trade zone that we need to break through. So this is what we're looking for this to be a trade. We're looking for this to happen. We're looking for market to break through here, come back, retest it. We don't need a strong retest for this one because it can just pull through very quick. So we just want to see the 50-minute candle come back. So it's going to break through. Then we want to see the 50-minute candle come back, retrace a little bit, and test this level and show signs of rejection, signs of resistance. When that happens, we hopping in. Well, I'm hopping in. And I know some of you guys doing that as well. So then we're hopping in and we're setting our stop loss to, I would set it around here. I want to set it up here, but it's too big of a stop loss. It's too big. So we set it at about 20 pips. Yeah, 20 pips is perfect. That's there. We set our stop loss at 109.18. Let's type it all out so you guys have the numbers. First take profit, definitely here. Yeah, I will set it at 8,900. Yep. Next take profit. Wait, just have to do this. Keep that one striped. Let's keep. All right, that's better. A lot of lines here. Don't want to confuse you guys, but I'm gonna explain everything. So we got that, perfect. Next level. Damn, market is pushing down. 877. And now is the question, TP4, we got a big move here. Because this is where we want to go, get into. So we have a lot of TPs here, stacked up. When we're passing the supply zone here, that's when the real action starts, or the real drama with this trade. So what I would want to do, I would want to have 5 TPs on this one. So I would place the first TP here. The first TP, the fourth TP. TP4, I would place it here. And that is 1084. When we hit that, and we have made a good profit. And that is very possible for us to hit today, actually. So we can make some major gains today, actually. And then we have TP5. And TP5 will leave it open because we don't know how much this wants to run, but we leave it open, but we have this in mind. So when we start to approach these levels, which is 1.0822, let's say 23, all right, okay. Like that. All right, so now I'm going to clean up a little bit here and explain what we're looking at. Okay, so we have an entry at about 1.0898. That's an entry. And what we want to do now, we want to see this. We want to see this market come back up and retest this area as resistance. So we can have an entry at any moment now. And I would actually put a sell limit here. Not will, actually will put a sell limit here. So sell limit is Euro USD. Yeah. $1.0899. Basically 109. That's the sell. Let me just put it out in the Telegram channel quick so that everybody got this before this activates, because it looks like it wants to activate at any moment. It's basically already active. Market is already dropping. Yeah, that's it. Okay. Yeah. Let me see where we got this. 108.99. All right. It's out in the Telegram channel, so that trade is out there. You can watch it. I just hope that it triggers, because it has escaped us a little bit now, so we need to see this come back. But I'm gonna do what you guys need to do: set the orders, set the limits, the limit orders, so we have it done. Then we don't need to monitor this anymore. We can proceed. Euro USD. Stop loss 1.0918. It's a stop loss. Copy it. Sell. $1.0899. Nice. And I get the question sometimes why I use MetaTrader at my phone instead of the computer. I think it's easier, actually. I think it's easier. I might start using it on computer. I've never done it. I've tried it a couple of times. I found it was a little bit messy. So easy to use it on the phone. But I might start using it on the computer also. I know a lot of you guys trade with Vantage and have their trading platform. Right, that's that. One more. So we're good. Let's see this market come back up. Like I wanted, let's speak up a little bit about this too. So the thing is, let's say the market doesn't come back and retest, never triggers our sell limit, and just whoop, shoots straight through everything. The emotional reaction here is fuck. I've left money on the table. I could have been in this trade and this and that. Yeah, you could. You're right with that. But the thing is this: if you didn't wait for this confirmation and then market did this instead, you get stopped out. There's always trades out there. There's always good trades. Try to take quality trades instead of focusing on being in as many trades as possible, and being eager to jump into trades quick. All right, because I know what's happening, and I know a lot of people that watch me have experienced that. I've talked to some people, especially yesterday and before yesterday. I know there was some drama with trading gold, this and that. I'm not gonna say too much, but I got a lot of questions, and the question, like, to answer it very simply, don't jump into things that you don't understand. So if somebody calls a trade or whatever, like, understand how their risk management works, understand what the trading style is, and trade accordingly to that. So don't jump into something just because they're having a winning streak right now or something like that, because that's just FOMO, and FOMO is the best way to get wrecked. So you will get wrecked. And so wait for, like I always say, have a strategy, stick to your strategy, and stick to a discipline. This is when you will get rewarded as a trader. Trust me, I've been doing this for almost 5 years, and I know when I've been losing, and I know when I've been winning, and I've been trading with teams, and I know, and I've seen the same thing with the team. So this is experience talking. Now look at this. Market is coming back up. Ain't that nice? Probably trigger our sell limits. The thing is, why are we having a sell limit? Because sell limit triggers when market comes back down again. So it doesn't trigger when market goes through like this. It triggers in this direction, in the bearish direction. So market needs to come above and go through again. So this is why we want a sell limit. Go safe. All right, this one is done. We're done with this one. We have our trade. We have called it out. It's in the Telegram channel. Let's look at Bitcoin and gold before we proceed with the day. Let's look at gold, our favorite, my favorite. Why is it my favorite? Because I've done so much money with gold. Gold has earned me a lot. It's the pair that I find the easiest to trade, most predictable. It's very affected by fundamental factors. It's very affected by what the Dixie does, the dollar index, and the dollar index is very affected by fundamental factors. So therefore, now, okay, look, we are at the supply zone. We are at a major supply zone. And last time we were in here, we broke through and we broke the 2000 level. So let's zoom out a little bit. I want to show you, I want to mark out the 2000 USD level for gold. Let's just do like this. Let's just take this horizontal line. Where is it? There. Let's do like that. Let's write 2000 so we know what that is. Good. Done. Okay, look. So this 2000 price level of gold is a very important level, as you guys see. It's been trying to break through forever. Like, it came once, retested it as resistance, came down, came up, broke through, nothing happened, came up, retested it as resistance, came back down. This is the third time now. Yo, what's up, man? What's up, brother? And this is the third time it's breaking it. Sorry, breaking it. It's testing it. And to zoom in now, look at this. It broke through, but it came right back down. So it didn't hold, but it's coming up again to test it again. And I believe that this time, what do you say in English? Third is the charm, right? Or something like that. So this is the third time. I think it's coming through. It happens very often when it's a resistance or support level and knocks, boom, finally breaks through. And the third time is very often the charm, and we have a lot of momentum upwards. So I definitely see this level break and hold this time. What I mean with hold is we see it break and we see market come back down and retest it and show that we have flipped this resistance now to support. 2000 is now our floor. It's not our roof anymore. So now it's our floor. It's a benchmark. Now we're moving up from there. And why do I think that gold is going to move up so much? It's because fundamental factors. It's because this whole bank crisis, everything, it plays in the hand of gold. People are selling off their bonds. They are when I say people, I mean countries, central banks, countries, big institutions. They are selling off their Euro USD active. Nice. They're selling off their bonds, the U.S. government bonds, their U.S. dollars, so to say, and they're buying gold instead. So so countries are stacking up gold as reserve now. This is why gold is flying. So gold is being accumulated in a very high frequency right now. Yeah, I can do that. I actually have to end the stream soon anyway. So cool. I'm hopping in. So with that said, what does that mean? That means we have a very, very strong bullish bias. All right. So now what we're looking for is this. We're looking for, of course, this whole area to break. We want to see market get above not only the 2000. We want to see the market get above 2020. All right, 2020. When it comes above this and start retesting this zone, this area, this level, that's when we know we have a very strong confirmation for a long ride up. But before that, anything can happen. So let's look just quickly here at where we're at right now in the market. Let's make this thin and nice like that. I'm gonna do another Fibonacci template, so we have two different templates, so we can distinguish the lines easier. For me, it's easy. I know what I'm looking at, but I know that it can get confusing for somebody watching. So okay, look. So this swing here, we have the sequence. Market, what did it do? Yeah, try to break through, came down and bounced off the 38.2 Fibonacci retracement. Very good, very strong bullish sign, because the 38.2 is what we want to see it bounce off from. So it bounced off, bounced off very easy, very good, very quick. And now we're moving upwards. And I would say this is what I'm saying now, that we have come down and we are doing a perfect retest of this support that you see here. All right, so we have done a perfect retest of this support here. Let's go on the lower time frame. You might have a very good buy opportunity now on gold as well. Sorry, on gold, which I don't really like, because it's almost like we're hedging the Euro USD. What do I mean with that? Euro USD, they move and gold mover, they move very, what's it called? Very similar, because they are always move against the US dollar. So this one is showing a buy, and Euro USD is showing a sell. Is it? Yeah, it's chopping around there. What does this tell me? This tells me that we might experience a buy for gold, but we need to be cautious with what we're doing. Yeah, man, I like this. I definitely think we're having a buy situation here for gold. We have very strong support down here. And we just entered that level. We've done a perfect retest. I definitely see this thing flying from here. Sheesh, this is a good trade. Okay, so the exact entry is what we want to look for now, because gold, as we know, moves fast. A couple of pips here is nothing. Can move 10, 20, 30 pips within a minute. Okay, look, so I want to see my entries here for gold. It's moving upwards right now, so but I don't want to mess with it. If it moves upwards, okay, cool. We're looking for a new entry when it breaks these highs. But now for me to enter, I want to see it come down here. That will be 1972, which is a very good level. 1973. So entry would be at about 1973. And that's that. I'll leave it like this for now. We want to see that happen. If it happens, I'm going in for a buy. And I will call out I can call out the stop loss right now actually, but I will call out the take profits later on. So we do want to have stop loss would be at about 1969.4-ish. That's the stop loss, and then take profits. We will get to that. All right. Let's see this entry happening first. I have this major support here. We need to dig in a little bit into that support before we can see this entry happening. That is that. USD is doing nice. It's not doing nice. It's not doing so much at all. It's at our entry. All right, cool. Now, quick just look at Bitcoin. When it comes to BTC, I'm gonna be honest with you guys. I cannot say much right now because I actually don't know what's going to happen right now. We We're happy. We broke above this whole trend here, this whole resistance here. We broke above it, retested nicely. We took some pips here, traded it, took some pips. I think we went up to take profit 3 or take profit 2. I don't remember. Take profit 2. So we had some nice pips. I think we caught like 90 pips or something secured. And then what happened yesterday? News, boom, broke through again, and now we below it again. Retesting it as resistance again. We don't like that, but market is showing signs of breaking through. So this is not a full confirmation because this trend might, like, you see this trend. I have to connect the charger. You see this line here being the trend, right? But it's not that accurate. So it can, like, the trend, let's say this is the line. Understand what I mean? So it's much thicker than just this orange line. This orange line is just to show us where the trend area is, where the resistance area is. Now we are at that trend, and we need to see a strong confirmation before we know that we have a nice buy situation here. But right now, this is what it is. We ain't touching gold. We ain't touching Bitcoin right now. We want to see this thing move a little bit, show some more distinguished move, some more. What can I say? Like a stronger behavior, so that we know what's going on with it. Because in the same time, you gotta understand, Bitcoin is very overbought right now, very overbought. So we have come up to the sweet spot zone. Very briefly touched it, and now we down here basically testing this as resistance, but I don't see this as full resistance yet, because as I said, this is a whole level. So I would want to see something like this for me to for this to be confirmed as resistance. All right. So Bitcoin right now, nothing. We have Euro USD. Oh man, my internet is slow now. I hope the connection is good. And then we have gold that we're looking for the last confirmation. We want to see price come down to 1973. We basically hedged Euro USD and gold. So that is that, my people. I'll see you guys next week, Tuesday, maybe Monday. I wish you guys a blessed day. Stay prosperous and trade safe. All right.